Hello, I'm Giuseppe Basile. I'm the Research Trader. You can find at the website www.fibstalker.com. I also post regularly on Twitter using the FBStalker nickname. Good evening. Today is March the 13th, 2014, and it's Thursday. It's 15 to 10, after 10. In Toronto, and in this video I'm going to review for you four markets: the euro dollar, the S&P 500, the dollar index, and the gold mini future. Today was an incredible day, and it shows how news, even when they are positive, can cause negative effects on the markets. And before before I dive into the market, I just want to remind how, today there was no clear explanation for the reversal. Also, because the news coming from the Eurozone and US were very, very positive. So the data beat the expectation. But well, there are still concerns, and of course, newspapers, news services will always try to justify that. That those market behavior, price behavior, with concern about tapering, about China, but the reality is that the market will do what it has to do, and there are profits are taken out. And of course, there is always uncertainty in the geopolitical situation with Ukraine and China, but there are always reasons for to justify a price move, and that's the main message I want to give you today. I also want to invite you to download and read my free ebook. It's called Key Concept to Correct Market Behavior, and it offers a different view on the way we interpret news, among other areas that are touched upon. And the book gives you a different perspective, and we need a different perspective in a market which is actually governed by program trading and algorithmic trading and high frequency trading. So I just wanted to start my video with this. Now, moving to the euro dollar, I want to show you the sequence we respected, and I've been providing this trade basically since the beginning of the week. And on Tuesday we saw participation at this 138.40 area, extension higher with a stop below 138.25. And congratulations if you took this trade. As you can see, price went into this 139.48 target before correcting. Now, I was anticipating a continuation higher, but clearly positive news killed this market clearly here. And at this point, if we keep, and I will always keep following the method, which is rooted in the footprint, in the observation of how the market, how program trading affects the market. We have another level of support, which is the next measured move, now the next extension long, coming at 138.69. So the failure level is 138.45. So if we move below the level, I think we are going to see a potential larger retracement. This could be to the 138.44, and potentially also the old halfway back from lows in beginning of February to highs, to recent highs. So this 138.45, it's an important level to watch. And if we break this level, it's very important to look at a retracement into the old halfway back, and that could be a very, very good entry. I want also to show you, if you are in a long, where you could exit before this large move lower in this market in order to take out the most of the profit. We saw the market trade into this measure move 138.82, and we hit the first target just one or two pips below that, and then we had the next measure move here, which could be modeled from lows to highs. At this point, price went into the first target 139.20 and second target 139.34 here, so that we knew that on the 15 minutes we were in extensions. And actually, as you can see here, the next extension traded nicely, and found participation at this 139.30, and eventually bringing price into the first target and the second target, which was actually not touched, but the market traded less than 3 pips. So that is a hit, and of course, when the market moves in extensions, we anticipate moving in extensions. So I wanted to see a continuation higher, but actually we saw this sequence not being respected anymore. 139.53 was broken on the downside, and that was our signal to exit. The sequence of measure move lower here was also very neat, and actually we had a highs to lows first tradition, then the market immediately started moving in extension, as you can see from these big bar red bars, and then we had this extension which brought price, which traded at 139.12 area of resistance and brought price into first and second target. So at the moment we have actually a break of this sequence. So the rules will tell us, and as we are in a supporting area of support here, the rules will tell us to buy. I would actually wait for tomorrow and see. There is the possibility that actually this market might not continue just right away here. Moving to the SP500, of course, the news will tell you that it were the stock that were responsible for bringing down all the markets, and we saw this move lower, and we know that we had this move lower because we know that we hit targets, and this is profit taking. The targets were the lows to highs here, and we can actually see, if I trace this in a better way on this weekly chart, we can actually see that the recent highs are not more than just a first target here. You will remember that we also have the other measure move, the extension measure move. There was actually there was the actual target. So we saw some profit taking from this basket move here at 180 area here, and there is a possibility now for a retrace into the old way, halfway back from lows in February to highs into 1803. So when we get there, if we get there, that would be a very good long entry. I want to also show you that the measure move that I showed you yesterday never broke. So the short at 1864 with a stop above 1869, so 5 points, broke price into 1839. So it was a 25 pips points move here on a 5 points of risk. So 5 reward to risk trade here. So it's very important to check what happens in this area of resistance and support, which actually model what program trading is doing. Moving to the dollar index, well, we saw today the move, and actually the sequence, the last measure move in the sequence was from these highs to lows, and we saw a price actually moving into lows today, which was also the target. And these lows, they fall exactly at the previous lows. As soon as we got there was a bid in the dollar, and so money apparently went outside the stock market and into the dollar here, and we have to verify whether the next measure move has already failed here or not, and this would be the trades from highs to lows. And as we can see here, this measure move failed, and it means that there is the potential for this market now to reverse and move higher, which would actually bring the euro dollar lower. So let's see where this brings us. Finally, the gold had a very nice trade here. You will remember in the last few days and weeks we had identified a level of a new anchor which provided the first trade, 1312, with a stop below 1308, which was briefly breached, but eventually broke price into 1337. There was no way we could identify this level before, but only after the fact, only after that this target was hit. But this gave us a very important, we couldn't trade this move, but this gave us a very important information here, because we could actually trace now the next measure move, and we saw price participating right at that 1320, and we also saw this gap higher Sunday evening 2 weeks ago, and of course this move brought price into the first target eventually, and today it brought price right at the second target, and we started seeing a reaction right at that second. Um, 60 minus 61.8% here. So it's very powerful levels, as you can see. As soon as we got here, the market stopped, and now if we need to see if gold wants to move higher, then the next level of support, of course, is coming. As we know, this is an extension, is coming at this 1361. So 1361 is the new long with a stop below 1350 57 here, and if we break this level, then we can see a wider retracement. I want to remind you that this market actually is now reacting now, and it broke the previous all the way halfway back here. It means that at some point you will need to retrace, and you could retrace to a number of different levels here, and the best opportunity would be to see it retrace to the old halfway back, but we don't know this just yet. But we will be able to time when this market tells us that this this very good and incredible move higher has come to an end. The market will tell us, so we don't have to anticipate the market. When the sequence of measure move that we were able to identify, and which is actually forced by the participation on program trading, will fail, then there will be the time to start thinking about a short or a new long at the lower levels. So I hope you enjoyed this video review. I hope you were able to profit, and congratulations if you took the euro dollar trade here. I'm very happy about that, and I wish you a very good evening, a great trading day. Tomorrow is Friday, so slow down. The market will slow down, and just enjoy it and enjoy the gains and your weekends. Bye bye now. Thank you.